Have we bottomed out? Is it time to buy back into the stock market? Well, the last few days in the stock market has been absolutely crazy. Unless you've been living under a rock, you would have noticed that the Dow, the S&P, the NASDAQ, pretty much everything in the market got hit hard over the last couple of days. We haven't seen this much volatility in the market in the last couple of years, and for a lot of you out there and a lot of new investors, this is something completely new that could scare a lot of people away from the stock market. But looking at today, we can see that we actually closed up green on the day, and we had a good rally throughout the day, which gave us some hope that we've bottomed out. So looking around, we see a lot of news articles, a lot of investors saying, oh, we've bottomed out, now we're going to start moving higher. But is that really the case, and should you start buying back into stocks? Well, let's find out. Welcome back, guys, to another video. My name is Nick, and on this channel we cover positive investing. If you like these kind of videos and want to see more like these, make sure to hit that subscribe button down below, and don't forget to hit that bell notification so you don't miss any videos when I upload them. Now let's get into it. Alright, so the first thing that I mentioned already is that a lot of investors have been saying that, oh, we've bottomed out, we're going to start moving higher now, this was just a blip, you know, like a correction, we expected that, we needed that, and all this kind of stuff, and now tomorrow and the rest of this week and, you know, the rest of this month or whatever should be a recovery and we're all good now. Well, the thing is, no one really knows that 100%, and if anyone out there tells you that they know this, then they're lying. There are many factors that have contributed to this drop, such as rising interest rates, rising treasury yields in the bonds, and just a lot of other factors in the market that have caused the sell-off. Apple, for example, was one of the huge tech giants which led this, because we did see a huge sell-off in Apple before their earnings, and some people contribute that as the issue, and that was the reason why we dropped. No one really knows, like I said, and there are many factors that play into this. But what you can do is position yourself smart and accordingly for future plays so that you can account for this the next time this does happen, which it will in the future. So now, for those of you that are long-term investors, meaning you're going to hold your stocks for the next 3, 5, 10 or more years, I personally cannot tell you what to do, but I can say what I've been doing, and that's absolutely nothing. I haven't logged in or touched my long-term portfolio. I've just let the stocks be, let them ride. And funny enough, most of my positions like Wynn Resorts and Shopify haven't really been hit that hard. So I just plan to leave those in there, forget about them, come back to them in a few years, and then worry about them. So for those of you wondering what I've done with my long-term portfolio in the last couple of days with this huge sell-off, the answer is nothing. I haven't touched a single position in there in the last couple of days. However, I have made a lot of changes in my swing trade account, which is my primary options trading account. So before I move on any further with this account, I do want to give a huge shout out to a fellow subscriber, Michael Perry, who has provided great insight into this whole debacle that's been happening the last few days. Me and him have been having a great conversation on the Apple's earnings video that I've made, so make sure to check that out and see what we've been talking about, see what kind of insight Michael provides, because he does provide some really good points which you should look out for if you're investing or even trading in the stock market. So like I said, there's not one factor that contributed to this drop, but one thing that we did talk about and that did come up in conversation was the VIX. So the VIX stands for the Volatility Index, and it's not something I've ever talked about really on this channel, but I do plan to make a video on this moving forward because I do see the value and importance in this, and I do believe all investors should be aware of this moving forward because it does provide some sort of insight as to where the market is heading. Now again, this is not 100%, no indicator out there is 100%, but it does give you some sort of idea as to, you know, what the market's trying to do, what people are thinking, how much panic there is, all that kind of stuff. So today I'll just kind of briefly touch upon the VIX on basics that you should be aware of, and that is that the VIX today actually hit a very high point. So in the last few months when stocks have been moving higher, the VIX has kind of been fluctuating between 9 and 13, whereas today we went over 50 at one point. So the higher this number, the more volatile the market is, And that's what we've been seeing, these huge swings in the market the last few days. So if we look at the charts, you can see here that the S&P had a swing of 109.97 points today. It had 125.22 points yesterday and a 48.95 point swing on Friday. The NASDAQ had a 301.8 swing today, 303.6 swing yesterday, and 126.2 swing on Friday. And finally, the Dow Jones had a 1,167.48 swing today, 1,596.65 swing yesterday, and a 571.13 swing on Friday. So these are all absurd numbers, especially for those who have been investing over the past year, especially in 2017, because the most we really saw the Dow drop during that time was maybe a couple hundred points. Never did we ever come close to 1,000 or over 1,000 points dropped in a single day. And the reason that this is happening is again because of many factors, but you can see that the VIX is higher, which means volatility is higher, which means that we're going to have bigger swings throughout the day, and you can see that clearly in the charts that we just looked at. Anyway, so the question I'm sure you're asking is, have we bottomed out? I mean, that's what I have over here. Is it time to buy, and have we bottomed out over here? The answer really, again, I don't know. No one really knows, but I'll tell you the way I'm playing it moving forward. So I have gone in and sold off a lot of my positions in my swing trade account, and that is because options, like you know, have expiry dates. Now, when an option or the underlying price drops significantly, the option value also drops significantly because now there's less likely of a chance that it's going to hit that strike during the same time period. So because of this, some of my options did take a hit. Some of them were pretty stable, but I did liquidate and sell off a lot of them because I do feel comfortable right now holding more cash. So now there's really two reasons why I want to hold cash in this portfolio. The first is just to provide a hedge. So I don't really trade many puts, which I probably will look into moving forward. But as of right now, my real hedge in the market is just holding cash. The second reason is to buy when I do believe that we are showing signs of recovery. Like I said, right now, I can't really tell. No one can really tell. Tomorrow could be a huge green day. Tomorrow could be another huge red day. You know, you need a few days for the market to kind of stabilize and settle off. And then you can kind of go in and make some educated decisions on whether you want to go long or go short in the market. Right now, I think by holding cash, it gives me that flexibility to go and buy in when I do believe we have recovered and we are moving higher. So full disclosure, I do have a few Dow Jones, DIA, and S&P 500 SPY options in my account. They are very tiny positions and they won't really affect my account much if they go to zero. But I am trying to play a bit short-term trading here with some calls and puts, because when we see volatility like this, we can see these options go from $1 a contract to $10 a contract or even more in a single day. So take advantage of this and take advantage of these swings. I am opening up a few small short-term positions in this account. But again, do not over leverage your account and do not go in heavier than you can afford to lose. So anyways, last real question is it time to buy back in? And in my opinion, I'm sure that you've figured this out already. No, I don't think so. I think that you should wait, or I at least will be waiting for at least the next week or so. I am watching the VIX for it to drop below 20. Ideally, I wanted below 15 to get back into my long-term calls. Now, it's very tempting, especially when you go look at the stocks and look at technical indicators. A lot of them have hit indicators that I do consider a strong buy. They've come down to their 100-day, 200-day moving averages, levels that they haven't hit in a very long time. So from a technical standpoint, it does look like a buy, but remember, fundamentals always trump technicals. So you should always make sure that the market conditions are ideal when you want to go back and make a long-term position in the market. As you saw in the last couple of days, selling and panic selling can happen a lot quicker than when a stock goes up and a rally occurs. So keep this in mind. Make sure to keep an eye on the VIX as well. Try to figure out your risk tolerance and why you lost a lot of money the last few days if you did, and if you didn't, kind of figure out a strategy how you could trade this volatile market, because I personally do believe we will see this kind of volatility, maybe not as extreme as 50, but somewhere probably around 20 to 30 in the next 2 months or so. I don't think that's going to end anytime soon. So that's maybe something to keep in mind and maybe to adapt your trading strategy to. So once again, I want to thank Michael Perry. He provided some great insight on this. I'm sure he's going to leave comments down below on this video, and I encourage you guys to ask him any questions in the comment section, because I did learn a lot from him personally, and we all can learn from each other by providing value and providing insight into things others may not have considered. So I encourage you to comment down below. I encourage you to start a discussion down below, and either way, I'll see you in the next one, and don't forget, invest positively. Peace.